Hi everyone, welcome to this week's Technical Insights. The Dow Jones Index closed nearly 400 points lower on Friday as First Republic and other regional banks resumed their slide. The US stock also fell on Friday as investors pulled back from position in First Republic Bank as well as other mid-tier banks amid the lingering concerns over the state of the banking sector. The Dow Jones Index lost 384 points or 1.19%. The S&P 500 slide 1.1%, while the Nasdaq Composite was down 0.74%. First Republic Bank was down 33% on Friday to end the week 72% lower. That marked a turn from Thursday relief bound, which came when a group of banks, including JP Morgan and Bank of America, said it would aid First Republic with 30 billion in deposits as a sign of confidence in the banking system. Friday nosedive weighed on the regional banking sector, which lost 6% in the session and finished the week 14% lower. US-listed shares of Credit Suisse also closed down nearly 7% as traders passed through the bank announcement that it will borrow up to 50 billion Swiss francs from the Swiss National Bank. The stock lost 24% over the course of the week. Despite the down session, S&P 500 advanced 1.43% this week. The Nasdaq Composite gained 4.41% as investors bet on technology and other growth names ahead of next week's FOMC meeting. This was the best week since January 13 for the tech-heavy index. But Friday's slide put it down into the negative territory for the week, finishing 0.15% lower. With that, let's take a look at the charts and see if there's any opportunities in the US banking sector. The first banking stock that we are looking at is JP Morgan. For the past 1 week, JP Morgan share price is down 2.44%, and for the past 1 month, it is down 11.16%. Year to date, it is still down 6.97%. During the Fed to March period this year, we see that there's a double top formation at the price level of 144.34. It has also breached the double bottom formation that we saw in 2022 December at a level of 128.41. And we are likely going to retest the high that we saw in 2022 August at the price level of 124.24 next week. So if prices were to breach this level, the next support level would be the May low in 2022. That is the level of 115.02. The latest MACD reading is negative 1.47. A negative reading means that we will likely see more downside pressure to JP Morgan share price in the coming few weeks. The latest RSI indicator at 34.27 signifies that there's very weak momentum in the share price, and in the near term, share price is likely going to come down lower. So I expect the share price of JP Morgan to retest the 124.24 level that we saw in August high next week, and that will possibly be breached. And then after that, in the coming few weeks, we may retest the 2022 May high at 155.02. The second banking stock that we'll look at this week is Bank of America Corporation. For the past 1 week, Bank of America is down 8.25%, and for the past 1 month, it's down 21.23%. Year to date, it is down 16.28%. During the February period, we saw that Bank of America's share price peaked at the level of $37 and has since gone on a very steep downtrend. The previous high that we saw above the $37 was the 2022 high during the November period at $38.60. Now it has breached the October low that we saw in 2022, and that is the level of 29.31. And that is also a double bottom formation in the year of 2022 during the July to October period around the price level of $29.67 to the $29.31 level. In the near term, we can see that during the past few trading days, Bank of America's share price actually formed a mini double bottom around the price level of $27.82. The lower bound of the Bollinger Band is trading at 27.29. Looking at the MACD indicator, the latest reading of negative 0.54 tells us that there may be still a bit more of a downside to come for the Bank of American share price, although during the last 3 trading sessions, we can see that this downtrend momentum in the MACD histogram reading is starting to weaken a little bit more. So with the RSI latest reading at 19.26, this has already reached the 30-point mark, which is the oversold limit for the RSI indicator. So prices has now gone into the oversold region of the RSI indicator, signifying that there may be a rebound soon for Bank of America share price. So with the weakening of the downtrend momentum as indicated by the MACD indicator, as well as a possible rebound due to the oversold indicator and the RSI, we may see that the mini double bottom formation on the Bank of America share price at 27.62 may cause a rebound back to the low that we see on October 2022 low at 29.31, or even retest the low on July 2022 at 29.67, giving us a bit of an upside on Bank of American share price. The third US banking stock that we are looking at is Citigroup. In the past 1 week, Citigroup is down 7.97%, and in the past 1 month, it is down 12.96%. But year to date, it is only down 3.28%. Since the high we saw in March, which is $52.45, price has been on a slide and reached a low of about $43 or $44. The year-to-date high for Citigroup shares is in February, where it is reached a peak of $53.23. Recently, the price breached the low of May 2022, which is the level of $45.40. If you look at the MACD indicator for Citigroup, the latest reading we have at negative 0.74 means that we still have some downside to come for Citigroup shares in the near term. The RSI reading at 33.11 also tells us that there's weak momentum in the current share price, in the current momentum of Citigroup share price. However, you can see the two lines over here, which is the low in July 2022 at $43.44, as well as the low in 2022 December low at $42.91, should provide a good support level for Citigroup share price. And by then, Citigroup share price in the RSI should retest the 30-point oversold signal again, and thereby provide another technical indication that we may see consolidation or even a technical rebound of Citigroup share price around the $42.90 to the $43.44 level. So that will be my coverage of this week's technical insights. In the meantime, trade safe, and I hope to see you in next week's technical insight video.